Japan, a longtime close friend of the US in Asia, just made a move that Washington might see as a challenge. The government of Shigeru and Shiba is making it clear. They won't just follow America's lead anymore. Right now, their main goal is to help their own economy. That's why Japan started buying oil from Russia again, even with US rules against it. And this isn't the only sign that Tokyo is breaking free from Washington's influence. Last month, Japan worried about its rapidly growing national debt. So how did they react? The US did nothing. No help, no words of support. Even though Japan is the biggest holder of American bonds, with over $1.1 trillion. Because of Trump's trade rules, Tokyo is even talking about selling off those bonds. For the first time in 10 years, Japan is showing that its own interests are now more important than others. Meanwhile, the world is moving away from the dollar and towards the Yuan, especially BRICS countries and over 20 other nations that have joined the group. And Brazil is stepping up. They are seriously thinking about lending and borrowing in yuan, not dollars. All of this is happening while the US has a huge debt of almost $37 trillion, and people are less interested in American bonds. If BRICS countries fully switch to the yuan, it could quietly but surely lead to the collapse of the entire dollar system, which has powered America for decades. And the most worrying part is that most people don't even know this has already started. So let's get into the details. For over 50 years, Japan has been America's most reliable ally in Asia. It supported Washington's policies and tried not to do anything that might harm relations. But now, this time of obedience is coming to an end. Tokyo has taken a step that the US not only opposed, but tried to prevent. Japan has restarted importing oil from Russia, directly challenging the sanctions put in place after the war in Ukraine began. This isn't a random deal or a sneaky workaround. It's an official, government-approved decision to put national interests above outside pressure. This is the first oil shipment from Russia to Japan since the beginning of 2023, and it's completely out in the open. The government told To Oil, a private refiner, to buy 600,000 barrels of Sakhalin blend oil. This oil comes from the Sakhalin II project, which also supplies Japan with liquefied natural gas. And here's the thing. At this plant, gas is the main product, and oil is a byproduct. If Japan stops buying the oil, gas supplies could also be at risk. That's why the authorities didn't just allow the purchase, they started it themselves. And they did it at a time when the entire West is avoiding Russian oil. But it's much more complicated. This deal is happening because of a temporary US exception, a special pass that lets Japan buy Sakhalin II oil without breaking sanctions. However, this exception runs out on June 28, 2025. If the US doesn't extend it, Japan will have to choose, either go against Washington or face energy shortages. Right now, Tokyo is just buying time, but it's making it clear that to save its economy, Japan won't wait for approval from across the ocean. There's another twist here. The oil was delivered by the tanker Voyager, a ship that is under US and EU sanctions. Usually it's risky to work with such ships, but since the temporary permission is still active, there won't be any punishment this time. Plus, the EU doesn't use secondary sanctions on countries outside Europe, so the deal stayed within the law, but it still looks bad. This is one of America's closest allies bringing in Russian oil on a sanctioned ship. All of this shows how serious the energy situation is in Japan after the Fukushima accident. Energy is now out of favor. Now the main source is LNG, which means we need to support both gas and the oil connected to it. And when gas supplies are at risk, Japan is ready to make compromises. But this could have effects beyond Japan. If Tokyo can get special treatment and import Russian oil without issues, why shouldn't other countries ask for the same? Each time this happens, it weakens Western sanctions and gives Moscow money at a time when the US and its allies are trying to isolate Russia. This energy deal is a serious warning. Japan going back to Russian oil shows how easily the West's unity can fall apart when money matters more than politics. And this might just be the beginning. But it's not just about oil. Japan is facing a huge government debt crisis. Last month, officials officially said the situation is very serious. Right now, Japan has the highest government debt among developed countries. It's more than 260% of its GDP. The yen is getting weaker, prices are going up, and the economy is struggling. The Prime Minister has already said that Japan's money situation is worse than Greece's was at its worst. But how did the US react? Not at all. No financial help, no statements of support, not even a hint of caring. And Japan has been one of the biggest helpers of the American economy for many years. It holds over $1 trillion in U.S. government bonds, more than anyone else. And that money helped pay for U.S. wars, economic rescue plans, and other big spending. And now, when Japan is in trouble, America is silent. This silence is making Japan rethink what's important to them. Why should they help save the dollar if the U.S. won't help save Japan? In Tokyo, there are more and more warning signs. The government might start selling off American bonds to help its own economy. If that happens, there will be big problems. Interest rates in the U.S. could jump, the dollar could get weaker, and other countries, seeing Japan's reaction, might also start getting rid of their U.S. debt in large amounts. But as if debt and energy problems weren't enough, now Japan is also getting Trump's tariffs. His America First policy is back in action, and with it, new taxes on imports, including Japanese cars, steel, and electronics. During his first time as president, these taxes already cost Japanese companies billions of dollars. Now that Trump is going back to his tough economic approach, Japan is getting ready for more losses. But instead of asking for help, they are changing their behavior. Tokyo is rethinking its whole foreign and economic plan and is ready for changes. Give up on American policies if they hurt Japan's interests. But of course, this doesn't mean Japan will suddenly become an enemy of the U.S. The alliance with America is still valuable, but now it no longer seems untouchable. Japan no longer takes it for granted. It's adjusting its policies to a new reality. Where American leadership is unstable and unpredictable, new paths are appearing. Despite long-standing disagreements, Japan is signaling its intention to get closer to China in trade. At the same time, ties with other Asian countries are getting stronger. Tokyo is getting ready for a future where it will have to rely only on itself. Meanwhile, BRICS countries are doing what they used to only whisper about. Now it's becoming real. They're turning away from American government bonds and starting to buy bonds in Chinese yuan. This is a turning point. For many years, dollar-backed papers were seen as the safest. Everyone wanted to keep their reserves in them. But now, BRICS countries are making it clear. They don't need the dollar anymore, and they're showing it with their actions. Brazil was the first to decide to change course. It started issuing bonds not in dollars, but in yuan. And this isn't just about money, it's also about protecting independence. After the U.S. froze Russian assets and cut it off from global payment systems, many countries thought if there's a conflict, their money could also be at risk. Brazil is no longer looking for help from the West. It's turning to China and getting good deals, fewer rules, flexible interest rates, and access to a big financial system. This lets it avoid the risks that come with the dollar, and Brazil isn't alone here. India, South Africa, Turkey, Argentina, everyone is watching closely. Some have even started getting ready for the change. For countries in the global south, yuan bonds look more reliable and appealing than American ones. China is ready for this. Its central bank has been working on yuan payment systems for a long time. It's making currency swap agreements and making it easier for foreign investors to buy its bonds. Before, the U.S. controlled the global economy because everyone needed the dollar. But now, more and more countries are tired from being dependent on decisions made in Washington. When the U.S. raises interest rates, other countries' economies suffer. They put on sanctions and block access to the dollar. That's why BRICS countries are turning to the yuan to protect themselves and become more independent. And it's not just about buying papers. Chinese banks are already helping BRICS countries not only issue bonds, but also build full financial operations. And all of this is in yuan. A few days ago, Brazil made an important announcement. It's going to issue what are called panda bonds. These are bonds that are in Chinese yuan. This might sound like just another technical step, but actually it's about a possible shift in the global financial system. Usually, countries like Brazil borrow money in dollars. The dollar is stable and its interest rates are lower. But right now, Brazil has a trade surplus of $74 billion. It sells more than it buys, and the dollar rate, while a loan in yuan, costs only 2%. Even with some currency risk, the difference is noticeable. Also, Brazil trades a lot with China. If a country is already getting yuan from trade, why convert it to dollars later? This isn't just about interest rates anymore. It's about getting out of dollar dependence. Brazil is a big economy, and its steps are important. If it manages to borrow money in yuan, then others will look at this method too. This could be the start of a long but steady departure from the dollar's world. And to make things worse, Trump's tariffs only make the situation worse. The trade war started by Trump made life much harder for other countries. It became harder for them to earn dollars by selling goods to the US, and that means there's nothing left to invest back into the American economy. And now that Brazil and other BRICS countries are starting to bet on bonds in Yuan instead of American Treasury bonds, there are fewer and fewer buyers for US debt. And this isn't just a small problem, it's a serious threat. If there's no demand for US government bonds, they have to raise interest rates to attract investors. And higher interest rates mean it costs the government more to borrow money. Right now, the US debt is very close to $37 trillion, and even a small, higher interest rates could mean hundreds of billions in extra costs every year. The dollar won't crash overnight, of course, but little by little it's losing its special place that made it the backbone of the world economy. And the scariest part is, if the US can't attract money from other countries anymore, they simply won't be able to pay their own debts. What about Japan? Things aren't easy there either, especially in the bond market. The returns on long-term Japanese bonds have started to go up very quickly. The return on 40-year bonds recently broke a record and reached 3.7%. Now it's gone down a bit to 3.18%, but that's still 70 basis points higher than at the start of the year. The returns on 30-year and 20-year bonds are also going up by 60 and 50 basis points respectively. At first glance, the numbers seem small, but in the world of bonds, this is a big and risky move. As a result, Japanese investors have started bringing a lot of money back home. In 2024 alone, they bought a record 28 trillion yen in Japanese bonds. That's about 180 billion US dollars. Meanwhile, investments in American and other foreign bonds have gone down. Yes, this is called capital outflow. Money is flowing from the US back to Japan. And all this is because Japanese bonds now offer much more attractive returns. Big companies like TNDA Asset Management and Dai-ichi Life have long warned that if the returns on 30-year bonds reached 2-2.5%, capital outflow would begin. And now it's in full swing. All this points to one thing: trust in the US financial system is fading. And you can see it from Tokyo to Sao Paulo, from BRICS countries to the entire global south. Now the main question is, what will Trump do? Will he try to win back lost trust? Or will he double down and continue his economic fight? And so you don't miss how the situation unfolds, subscribe to the channel and turn on notifications. Perhaps we are witnessing the old system crumbling and a new global reality being born. Thanks for watching, and I'll see you in the next video.